I'm with Frank Holmes, CEO of U.S. Global Investors. Frank, thank you so much for joining us again.
It's great to be here.
So talk to us about what makes U.S. Global Investors innovative.
Well, you have to be innovative to be competitive. And what's happening in our world is we're so caught up with Uber and how disruptive it is to the taxi cab business. Well, the same thing in our mutual fund world is being disruptive with ETFs. And then with ETFs is coming smart beta. What is smart beta? It's about data mining. And it's recognizing to be even an active manager that you have to employ mechanical learning, neural network learning, and how do you take data and learn from it on a recurring basis. It's disruptive because it's a capacity to learn by its previous mistakes. And you can go back over 20 years of data and make a determination what works in an up cycle and a down cycle. And different asset classes have different factors that amplify better alpha, they call it, better returns. Just like if you're selling clothes or you're selling anything, you're trying to attract buyers, the same thing happens in the capital markets. Where will investors go? What country will investors go to? If countries raise taxes greatly, money leaves that country. If countries have poor inflationary policies, etc., money leaves that country. And money will go to a country where taxes are attractive, where there's good policies of government. Same thing happens with any stock.
So you were known as 5-year warrants, that was you. Is that still effective or relevant today?
Well, I think it's relevant for little small micro caps, but for the bigger caps, there's not doing it, and I think it's more significant is to look at what are the factors that attract investors that are not gold related. So what makes a non-gold investor want to go? Well, one common theme in all asset classes is that who delivers the highest cash flow return on invested capital. And that seems to be all over the world. Those companies that have higher cash flow returns on invested capital attract more investors.
Now I'm curious about a driver, fear trades. What's your comment on that?
Well, there are two drivers for gold prices, and I'm trying to bifurcate for simplicity. What drives it is government policy. So you either have fiscal policy or monetary policy. Fiscal policy is tax and regulation. So in America, that would be Obama and Congress. Right. Monetary policy is the Federal Reserve. And so you have to focus on money supply and real interest rates. Most people in Europe and in North America focus on the fear trade, and that is negative real interest rates. What will the government pay you to buy their bonds, take away and subtract the CPI number, gives you either a positive rate of return over inflation or a negative. A year ago, there was a positive 130 basis points return on buying government paper. Today, it's minus 30 basis points. Gold has gone up. They're inverse to each other. So what do I think going into next year? I think we're going to live with negative interest rates, and now we're seeing most of the world with negative interest rates.
Frank, thank you so much for joining us today.
It's great to be here.
For more expert videos like this one, make sure to check out more of them on our website.